Hello, Aurimas. Welcome to the Builders Podcast. It's a pleasure to have you here. How are you today?
And thank you. Hello, everyone. Very nice to see you, and happy to be here.
Nice. Would you like to start to give us a little bit of your background, an intro, and of course a description of Copla?
Absolutely. So I like to present it myself in the following way: that for me, Copla is story number 11, which means that there have
Mm,
been 10 other startups, 10 other companies, 10 other journeys. Let's say it this way, as an early stage employee or as a founder. So yeah,
mm.
lots of different experiences, mostly failures. So out of those 10, 7 failure stories, but 3 very interesting exit stories as well. Some bigger ones, some smaller ones, but yeah, I can say that I have been startupping pretty much all of my life, and a number of interesting stories to tell.
Nice. Yeah, failures are part of the journey anyway, so it's very interesting. But before jumping into that, I would really like, because we were chatting before the recording. Can you tell us the stories about behind the pink glasses of the logos?
Yeah, it's actually a pretty cool one. So if you can see, well, I have my gorilla here with pink glasses, right? And the story is the following. Well, prior to Copla, I have been building critical core banking infrastructure products,
Mm,
products to the financial industry, products to electronic money institutions, payment institutions, banks, credit unions, etc. And as you can imagine, we were a critical vendor, the one which is very practical and focused on cyber and compliance and security, etc. And it was interesting to see that even though we were operating in the industry, in the financial industry, where there is a lot of data, a lot of sensitive payment information, etc., I saw a number of customers that took cyber and security topics in a very, very loose way. In many
mhm.
cases, they were moving documents from left to the right, then from right to the left, and they would call that security. So, well, the idea behind those pink glasses is that, well, again, with Copla, we operate mostly in the financial industry, and we try to help to take those pink glasses away from our customers who kind of
Mm.
still see that or think or treat that cyber is not a very important topic, and once you take those pink glasses away, well, you can see that there are a lot of things to do. This is important, and otherwise you face a lot of risks. So yeah, that's kind of the story and the mission that we are on.
Oh, that's a nice story. But I would love to start from your failures. To be honest, so you were talking about 7 failure stories before 3 good one. Let's call them. So can you tell us a little bit more about them?
Yeah, absolutely. Well, I'm Lithuanian myself, and usually in Lithuania
Mhm.
we don't like to speak about failures, right? But when you travel
But it's
around the
part of the
globe,
journey. It's not something
no,
that you
no, but
should be.
and I'm
Yeah,
fine with that. I'm
yeah.
fine with that, and that's why I mentioned those failures first of all, because when I travel around the globe, now I realize that most of those failures are experiences and good experiences,
Mhm.
which help me to improve and as a human, as a CEO, as a founder, basically in all different contexts, right? So yeah, well, a few of those failure stories, they were really quick, right? So you kind of launch a product, try to do it as soon as possible, and well, you either try to succeed fast or fail fast, right? And in some cases, I really failed fast. I did, however, have one story which took me almost like 5 years when I was hustling, fighting, trying to build, and eventually it did not work. So that
Mm.
was back in 2012 to 2016 or 17, so quite a few years actually. And I was focused on building a mobile payment network, and we
Mhm.
raised some capital. We had an extremely innovative product. We launched this product in a number of countries, including the UK, where Lloyds Bank and Mastercard were our customers, and it kind of seemed, as something that is already scaling, but eventually we were not able to find a model that actually would be sustainable and would be working. So, yeah, 5 years of my life
Mhm.
fighting every day, trying to make it work. Eventually did not work, but then yeah, it brought me to some of the other stories, which later turned into successes.
Yeah, I know it's a very common story under that point of view. So the fact that you need to try a couple of things first before actually succeeding is very very common. But it also gives you the kind of experience that is necessary to succeed in this field overall as a founders, I would say, but specifically in this field. And then how did you arrive? How did you find Copla? So what's the story behind Copla in the beginning on the launch of the company itself?
Yeah, so as I mentioned, well, in the previous journey, we have been building critical core banking infrastructure, right?
Hmm.
And it was 2017 to 2023. In 2021, I exited my previous venture to SumUp, which
Mm.
is one of the bigger European
Yep.
fintech unicorns. It was in that journey when we realized that there are a number of things that the financial industry and especially the licensed financial institutions have to do and will have to do. And it has now materialized into DORA, the Digital Operational Resilience
Yep.
Act, and resilience is probably a key word in that abbreviation. Well, there are a number of things that financial institutions have to do in order to improve their cybersecurity level, in order to improve their procedures, train people, improve a number of things that we do within the organizations in order to become more resilient, right? Test that
Yep.
properly, prove to the regulator, prove to the partners, prove to the customers, etc., right? So at that stage, well, it was after the previous venture. Well, of course, we have our retention contracts, which we respected, but always really wanted to kind of become founders again. And it was me and Andrew, with whom I have previously built Paysolut, the critical core banking infrastructure
Mm.
company. So Andrews came with an idea. I supported that. We also found a couple of the other co-founders that joined us and kicked off Copla in 2023.
Mm. Oh, that's very interesting. So you basically saw the problem in the market like firsthand, and you said, yeah, given the kind of experience that I have, given the background, given everything that we already did until the exit, we can actually do it again, trying to solve this problem, basically.
Those stories were very related, and because we saw how companies approach that problem previously, and of course with with DORA, the Digital Operation Resilience Act, and also a number of the other compliance frameworks which are being
Mm.
launched across Europe, NIS2, the same old good ISO 27001,
Yeah.
a number of the other requirements which are coming, such as AI Act, Cyber Resilience Act, etc.,
Yeah.
etc. There is an obvious trend that everywhere where you have digitized data, companies will have to improve, right?
Yeah.
And for a long time, this problem was kind of ignored, or maybe only the big banks or big energy companies they really took the cyber topic in a serious way. And what is currently happening is that a number of a number of companies, and it's probably going to be hundreds of thousands of companies across Europe and, of course, across the globe, will have to take care of those topics in a really serious way, starting from documentation, then moving into managing their controls,
Yeah.
continuity, testing, employee education, etc., etc. And this is something that is being pushed into the market, first of all, by the regulators. But then also every company which is implementing that, we can see that they push the general level of cyber readiness higher, which means that their partners, customers, etc., they also kind of see that they see the same trend. As I like to say, I believe that this product that we are building today is mostly used by the financial industry and vendors to
Hmm.
the financial industry. However, in 10 years, it will be needed by coffee shops, bike rentals,
Mm.
yeah, like even very, very simple businesses everywhere where your data is digitized. You will need to find ways to protect it. And if you don't want to do it yourself, then regulators will push you, help you, motivate you, whatever the right word is, to increase your cyber awareness and readiness for any potential incidents.
That is very, very interesting. Before jumping into let's say into the latest updates, I would say I really would like to focus on the regulation side. So you've been mentioning, different kind of regulation that are, speaking about data, personal data, mostly in Europe. We're talking about DORA. We are talking a lot about MiCAR, for example, in the fintech market. But there is also ADAS 2.0 coming in 2026 and in the upcoming years. So I wanted to understand your point of view when coming to how regulation is shaping this market right now, because this has been one of the trickiest topic in Europe. Europe has always been so as hyper regulating market, usually pushing back innovation, but this is actually helping companies like yours, and this is actually helping also financial service companies out there to be safe, or to be safer, I would say. So how do you see that kind of argument of being more regulated versus being more free and pushing more for innovation?
Yeah. Yeah, I'm thinking about it probably, first of all, not from the angle how it helps companies like us. Well, of course, it helps to build new business and motivate customers to invest more in that area. But I'm probably, first of all, thinking from the point of view of a data security. And because, look, well, 5 or 10 years ago, we did not see every day in the news that a bank was breached,
Mm.
hosting center was locked, this company or that company lost its data. Today, it's pretty much every day, right? So basically, you open cyber news and you find those breaches, issues, problems, and that is not fun, right? So well,
Mhm.
this well, all of these revelations that you mentioned, and there are many others, they are first of all there to try and help businesses to become resilient, right? Because then shit hits the fan, well, nobody knows what to do, right? And people are trying to kind of solve a problem on the go, and companies are reactive. All those regulations, we are kind of trying to put a foundation so that companies would be able to resist, would be able to prevent, would be able to explain to their employees, their partners, their customers, what needs to be done, how it needs to be done in order to be safe, right? And so, if you think about medicine, right? So if there were no regulations, then probably people would be dying every day in every single or every second operation, right? But there are certain ways how you behave, and that's the same with cyber, right? So because problem is becoming extremely the scale of the problem is becoming extremely high.
Yeah. No, it's actually a very good point. I mean, I totally agree when coming to safety and regulation, of course, and that is an obvious problem, an obvious issue, something that we need to be in place. You were also mentioning a very interesting topic that is becoming more and more, current, I would say, that is data centers. You need those data to stay safe, also in the physical world, not only in the digital one. So how do you think that current trend in data center, growth and adoption all over the world is affecting safety of the data? Because we saw, for example, also recently that with everything that is happening in the Middle East, a strike in a data center can put a lot of data in danger, and that is of course affecting life of final customers.
Yeah, well, you touch a topic which to me is very much related to a business continuity plan, right? So that's
Mm.
a very good term, but also a certain methodology, how you manage it and why you do that, right? Because, well,
Yeah.
in your business continuity plan, you need to think about those scenarios, right? What happens if the data center is ransomware? What happens if your data center is bombed, like in the
Yeah.
latest events, right? And then what are the scenarios in order to keep business continuity, right? And especially in the financial industry, right? Because also the way the DORA is structured is that, well, even if you have a military actions going on, even if there are electricity outages, etc., you need as a financial institution to create a scenario, and that to me is very much all about business continuity. You need to create a scenario where your customers and customers, businesses, etc., would be able to access funds in your financial institution, right? So business continuity is all about kind of thinking about those scenarios, but also not only thinking about them, but also testing, like stress testing, right? And that's exactly what those regulations are trying to do. So that, first of all, we force you to think about it, then we force you to test it. And after some time, it will be extremely natural to do that and do that constantly, regularly. And it will be not even a question why this is needed, etc. Now we are in a pretty early days, and especially the small financial institutions or crypto. I see a lot of crypto customers to whom all of those things, they are extremely not natural, right? Because they come from the world where everything is decentralized, not controlled, not managed, etc., etc. And now suddenly, if you want to operate in that area, you need to be MiCA licensed, and as a result, you need to be DORA compliant, and you need to follow a number of different rules, right? But I think that we are in very early stages of the deployment and the implementation of those regulations, and in a few years to come, it will be extremely natural for every market
Mm.
participant.
Yeah, actually, crypto is a very, very good example. How do you bring, compliance and safety of data in a decentralized world? Mostly in a world where people do not want those kind of things to be in the same place. So how do you do that?
Yeah, well, you need to understand that safety and compliance is it has many different forms, right? So you usually start from identifying your assets and third parties. Then you evaluate risks related to your third parties and your assets. And then for each of that risk, then you are looking for ways to mitigate those risks. And that is translated into tasks, into deployments, into developments, into some of the other things like documentation, procedures, controls, etc., etc. There will always be risks, right? So there are risks with my laptop, which I'm currently using to speak to you, right? But they're probably low, right?
Yeah.
And there are risks with your vendors or with the technologies which you're using, which might be high, right? And then in as a CISO, as a chief information security officer or compliance officer, or as a CTO, in every case, when you find a risk, when you identify a risk, when you are looking for ways to mitigate those risks, right? And mitigation in no way means that you reduce this risk to 0%, right? So there will always be a risk, right? But that's why, well, this process of managing, be it DORA or any other compliance framework, means that you constantly need to update your assets, constantly need
Mhm.
to evaluate your third parties, constantly need to evaluate risks and understand and try to challenge yourself if the steps and things that you do are enough to mitigate those risks to the level which is acceptable to you and also to your regulator, right? Because
Mm.
in the financial industry, well, all companies, they are licensed in one way or the other, right? Is it a traditional financial institution or a crypto virtual asset service provider, right? So basically, in all cases, then you go through that process and you do that continuously in order to manage the business continuity.
Mm. No, that's a very good point. Uh, but I would love to also talk about, your experience as an entrepreneur directly, as a founder of Copla. So, can you tell me about, the first period, the very early stage of Copla? After the launch, how did you actually, move the first steps? How did you actually landed, for example, the first customers? Maybe it was a little bit easier for you because you had, a lot of experience before. But how did you actually do that?
Mhm. Yeah, well, so of course, when you're doing this not the first time, then you kind of already have some methodologies and ways of working, right? So, but
Mm.
well, the very early days was well, the original product and the original idea was a little bit different. We were even called in a little bit different way. the original name was Cyber Upgrade, which suggested that we are much more focused on cyber than compliance, right? We were thinking about the means and tools in order to upgrade your cybersecurity level, right? But it was a rough idea, and our original approach was that we tried to get into the market and tried to sell something related to cyber. And when I say something, right, so you get in front of the customer and you try to understand what things are important to them, what they are ready to pay for, what is possible to do in the short term, what is possible to implement versus what is not possible at all, right? And so we sold this service for an extremely low price to 10 or 15 customers. It was like in the area of 100 to 200 euros in the very first months, right? So just to get the product into the market, to understand the acceptance, trying to understand what people actually want to pay for, what they want to buy, etc., etc. And then with this, we kind of verified the things which are actually needed versus what you think are needed, right? And to me, this is the first step of every startup, is that as a founder, you have a number of assumptions, but then you go
Mhm.
into the market and market tells you what the reality is, right?
Yeah.
And you need to be able to face that reality, right? And then you're building company number 11. Well, you already know that this process is waiting for you, right? So market will tell you that this is not needed, that is not needed, this is already provided, this is cheaper, this is better done by somebody else. But this is how exactly we have been. We found out that most of our customers they begin their journey from compliance and not from the cyber itself, and that cyber in
Mm.
many cases is a result of the compliance process. And that was a very interesting learning, which exactly brought us to the phase when we rebranded the company and called it Copla instead of Cyber Upgrade, right? So that was Copla means compliance platform, right? So and that
Mhm.
basically we I don't say that we turned away from cyber, but we started prioritizing compliance as the first step, which is usually taken by our customers before they actually move into the actual cyber implementation phase.
And why do you think they care more about compliance than cybersecurity? Or why do you think they prioritize that
Uh,
compared to cybersecurity?
because there is a push from the regulator, and because in many cases customers they have not really experienced the actual cyber issues themselves, right?
Mhm.
The problem is that once they experience that, that is already too late, right?
Yeah.
Companies are going down, data is lost, reputation is lost, there are financial losses as well, etc., etc. Right? That's very, very painful.
Mm. No, yeah, it's actually true. Do you also believe that maybe they want things, to go faster with compliance, and they think about security a little bit later on? Because, compliance can be an enabler under that point of view. If I have a feature in my mind, or if I have an idea and I'm not sure if it's legal or not, or if it's
Yeah.
approved by regulators, or if it's something that I can actually do out there, I need a compliance check first, and then I can maybe postpone a little bit the security side of it, because that is not actually a real blocker. But then, of course, you will pay the price for that.
Yeah, but this is actually how it usually happens, right? So that most of the
Yeah.
companies they are focused first of all on documentation, on procedures, on defining things in the way that they would actually like this to work, and then we
Mm.
move to the implementation phase, right? Interesting to see that. Well, we are currently ourselves in a number of the regulatory audits, and regulators. There was like this way of thinking that once a regulator comes, documentation is going to be the first thing that regulator is going to look at, and
Mhm.
some of the examples that we see in our environments are that regulators actually trying to be extremely practical, which is very positive, I would say, right? So that basically they come and say, hey, well, you are black box to us. We would like to understand how you operate first. Show us what's in the black box, and then later give us your documentation to kind of support your ways of working and descriptions about the system and procedures and employees, etc., etc. So yeah, that's very positive, I would say.
Yeah, no, I agree with that. And what about your experience doing fundraising? So you recently closed a round, and you obviously have experience in those kind of things. But I was wondering, how was that for you, like right now? Because this is one of the questions that I always do, and I really like to see the difference in the answer on the other side. Because depending on the period of time, these can be tricky, these can be easier depending on also on the experience. If you're a first time founder, second time founder, 10th time founder, that really changed with your experience. So how was for you this time?
Yeah, absolutely. Well, does not matter what I will say. Well, building any round is not a simple task, right? So,
Mm,
yeah, I can say it was not complex. It was, or maybe it was easier than previously. It was round number 6 in my case, right? So basically, I have been raising funds with the previous companies as well, and this is already the third round that we have closed with Copla. It's over 9 million in total funding that we have now raised
mm,
with Copla, right? So, but well, every round is not easy, and yeah, well, I use a few tricks or a few tips which seem to be working. For example, um, I speak to a couple investors every week. It does not matter if I'm raising or I'm not raising, right? So my way of thinking is that raising funds is first of all about building proper relationships,
mm,
and only then you have relationships, and then there is a belief on the other side, and you actually are in the stage when you are, as a founder, as a company, you are ready to accept the investment. This is when match happens, right? So basically, every week I speak to a couple of different investors, and those conversations, they're extremely natural. Some of them they reach out to me, some of them I reach out to myself, some of them are sent to me by my existing investors as a referrals, etc., etc. And in those calls, I kind of try to pitch, but also learn at what stage we would be happy to invest, what are the amounts, what are the things that they're looking at, etc., etc. And those conversations they help me to build their KPIs, the OKRs, the focus points which I need to work on in order to implement, in order to be fundable, investable, and be
mm.
interesting to the investors, right? So yeah, it was a sizable round in our case. It was 6 million euros. Half of the round came from external investors, while
Mm.
half of the round came from the previous investors, which also leads me probably now to tip number 2 is that every time you're trying to build a round, you have to think it in the following way. So when you are raising again, you want at least 50% of the round to come from your existing investors,
Yeah.
right? So you want to have
That
somebody
is
on
that
board.
is usually always a very good signal that when investors want to remain in and to keep building.
Exactly. But wanting to be in and having capacity, these are two different things, right? So that basically,
Yeah.
when you're building around, you have to choose investors who have a possibility to follow on later and help you build the at least half or a big part of the next round that you're trying to raise, right? So basically, when I was raising right now, I also chose the right partners whom I know in the next round, which can be, I don't know, maybe 10 or 15 or 20 million, they would be able to invest a big part of the next round as well, right?
Mhm.
And this way you kind of, again, you manage continuity, and you know that, well, if you do well, then suddenly half of the round is more or less secured, right? And then you're looking for
Mm.
one or two external investors to validate your valuation, your process, your data, etc., etc. But then half of the round is more or less already done and coming from your existing investors.
Yeah, no, I do strongly believe that, if you have a round and, all the present investors do not, back you up again, that is a very, very big red flag because there is
Yeah, it's a bad
something,
signal. Yeah, it's
yeah,
basically when you become
so
non-fundable immediately.
yeah, 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 I totally agree with that. What was the level of your revenue at the time? How was, your ARR, for example, if you can disclose, obviously.
It was 1.2 million in terms of annual
Hmm.
recurring revenue and a base of solid customers. And base of customers to whom we can upsell, and also an international customer base.
Mm,
So yeah,
okay.
that was kind of the stage.
Oh, that's very interesting. I was thinking if those conversation with investors, they could also become conversation of business development in the end, because they have portfolio companies, and those portfolio companies most of the time will have to do compliance in a way or another, and some of them will obviously have a lot of fintech companies that need a solution like yours.
Yes and no. So I would say that well, investors, they can help you, but well, you are building your own business, right? So
Mm,
if you come
okay.
to them and ask for referrals, ask them to introduce you to this or the other guy whom you see that they are connected in the network or in their portfolio, they will send that introduction, right? But
Mm,
investors will never become your business developers or people who are actively building your business, right? And I don't think that this is rational to expect that. But
mhm,
if you do this homework on your side and send materials, send information, etc., we can certainly help. So, for example, last week I wrote a message to all of my investors. I said,
mhm,
guys, Copla has been focused on the small and mediums for long term. I have been I have never asked you to introduce me to any banks or big financial institutions. However, we are at the stage when we can actually think about the new ICP,
mhm.
size-wise, geography-wise, etc. If you have contacts within the banks, within the big fintech unicorns, credit unions, etc., please send them over to me, right? So, and yeah, and a group of them came back, said, give me material, give me this, give me that. But
Mhm.
well, if you don't do that proactively yourself, well, they will never think that they can actually introduce you to somebody who would be useful to you in their networks.
That's very very interesting, to be honest. But that also led me to the question of how is your relationship with investors in the end? Like you mentioned something very useful, so you can ask them for an introduction to a certain segment of companies that you are targeting right now. But overall, how is your relationship with them? So you actually reach out asking for questions, asking for advices, feedback. So how do you use the relationship that you have your investors? Are they only for capital, or they want them to bring value to the table?
Yeah, you of course. Well, ideally, you want both, right? So,
Of course,
and
that's the easy answer, I would say.
yeah, it does not always happen. However, well, I last week I had an event with one of my leading investors, and
Mhm.
he said, Aurimas always calls me after 6, which is actually true, right? So, whenever you are done fighting your customers, employees, products,
Yeah.
etc., and then if you have some open topics, open questions remaining, then, when I call my investor and try to discuss, well, that happens, once a month, yeah, maybe
Mhm.
twice a month, not much more often. But, well, I like to do that because on the one side, sometimes I get a good additional ideas, but also this way I'm kind of keeping them in the loop, right? Because
Mm.
then the day comes and I need to do some decisions. They more or less understand the context. They understand the problems, the issues, the possibilities, and also my way of thinking about that, right? And my approach and how I'm working with that, etc. Because well, there are decisions where you need your investors to agree or disagree, maybe
Yeah.
support you, maybe do some financial decision steps, etc., etc. And that way of communication helps. Of course, for example, now at Copla we have 10 investors, maybe more, and
Mm.
it's not realistic to call everyone and keep in touch with everyone, etc., etc. So that's why I usually try to use the approach that I have one leading investor. I call him or her, right? And I would expect him to involve all the other investors if needed and when needed, etc., etc. But there is always one leading investor who has led your previous round, and
Mm.
somebody who is well who has personal and motivation of the fund to help you and to push you forward.
Mm. Well, that's actually a very good point. Also, because right now in the kind of stage that you are at the moment, uh, it's also still achievable to inform all of them about big things. But long term, it's not possible to do that all the time. Not for small decision, sometimes also not for like big decisions. So it's going to be tricky overall. I was also wondering, like a little bit more high level. What's your take on the current status of the fintech market? I've been probably talking with a lot of different financial companies, financial services companies, and a lot of fintechs out there. And how do you see this market evolving recently? So, which are the main trends, for example, that you see happening when coming to compliance? You've been mentioning Dora. We have been talking about MiCAR. But what do you actually see in the market out there day to day?
Yeah. Yeah, interestingly enough, I can compare this market to the period like 10 years ago. And well,
Mm,
because I was involved in that market since 2012, and I have seen lots of ups and downs, and and a number of
yeah.
companies growing, a number of companies going down. But so, well, what I saw, like 7 years ago, it was really easy to get a license. Well, basically, regulators would distribute those licenses to the left and to the right, as I say. Right? It's certainly not the same anymore. Well, most of the
Mm,
regulators, they are much more focused on quality rather than quantity, which is, I think, for good. Obviously, it means that getting a license is more complex, and there are more requirements, and not only ICT requirements, right? Not only DORA, but also capital reserves, also your anti-money laundering requirements, and a number of things that you need to think about, such as business model, your technology, etc., etc. I think that makes market more stable. However, uh, the amount of companies which are trying to get a license, which are trying to invest, etc., I would say, well, the market is still extremely active. Of course,
mm.
crypto companies, the ones which are trying to get MiCA license, well, there are many of them, and they are aggressive. They are trying to get license from many different regulators, and this is the way that we are trying to grow and become proper market participants, because market is being regulated. So, well, I would say market is very active. There are a lot of investors, a lot of companies, some consolidation as well. But that also means that there is a lot of business for companies like us, and of course for regulators as well.
So, under that point of view, like the regulation, as we said in the beginning, is actually helping, new companies to be launched every day, but also helping companies like you to have a biggest market out there. Otherwise, a bunch of those crypto companies, companies, wouldn't be there because there were just no like base for them to actually run and to actually have operations in Europe.
Yeah, I think so. Well, I think that the maybe the smallest ones and the ones which are not prepared, the ones which don't want to invest, they are kind of filtered out. However,
Mm,
well, the market is still big, and there is a lot of work, and yeah, and there is a lot of push for quality, right? And I think that's a
mm.
very right approach by the regulators.
Yeah, no, I totally agree with that. Um, yeah, and how do you see like the actual capital market? Because I agree overall with the fintech market. I was involved in the same period of time, let's say 10 years ago, and I do believe that it's very very similar, to be honest, because we see more hype, more companies, more people, and more optimistic people, I would say, and that is always positive. But from a capital perspective, how do you think it is? In that period in time, and let's say between 2016 until 2020, I would say was rather easy to kind of raise capital. But right now, I think that is kind of different under that point of view. How do you see that?
It's so I would agree with you. It's just that from my personal experience, I'm actually,
Mm.
for me, it's vice versa. In
Oh,
my
nice.
previous business, and 2015 to 2020, I was raising capital. It was
Mm,
not easy for me for a number of different reasons, right?
mm,
And now with Copla, we have just closed 3 rounds in less than 2 years, and you can say, it's for me personally, for Copla, for us as a founding team, it was quite a ride, right? But I think that it's not because of the capital markets. I think it's because of the
Mm,
experiences, because of the
yeah.
Paysolut story, the exit to SumUp, because also with Copla we managed to hit another mega trend. So in general, I would agree with you that probably markets are much more reserved, and then raising capital is not that simple. But interestingly enough, in Copla's case, those 3 rounds they were quick to close. We were able to do that in a relatively uh, manageable way, and
Mhm.
but this is probably against the odds. I would say it this way.
Yeah, but I would say that it also makes sense in your case, because you had the experience, you were coming from successful operations, and so in your case makes a lot of sense, I would say. And maybe one of the questions that I rarely get to ask, how was the exit? How was the experience of actually selling your company and actually having one of those kind of success, one of those kind of milestones that not everyone out there is able to experience.
Yeah, well, of course, this is one of those few days in your life. Then you feel like you are on top of the world, right? So
Yeah.
that's for sure. Having said that, and this is not my first exit, right? So, and I
Mhm.
can tell you that in every case, after a few months or after half a year, after a year, you start climbing walls, right? Because
Mm.
not only have sold your company, but the momentum changes, right? So basically, the way that you used to push when you were founder, owner, CEO, whatever position you are, and then you sell the company, then in your mind something changes, right? So it basically,
Mhm.
okay, now maybe I can push a little bit less. Now maybe I can do, maybe somebody else will do this, right? So now I have just become a part of a much bigger organization. There is bureaucracy. It takes steps to implement a decision, to make a decision, to get funding. It's all like the pace is very different, right? And then at some stage you start climbing walls, right? So you don't know where to put the whole energy. And this is why Copla was born, right? Because of that emptiness, right? So it basically, so what to do now? How to use the potential that we have as founders? How to stay creative? How to stay as somebody who is learning every day, and then you come
Mhm.
back to building a startup, right? So but yeah, on that day when you sign documents, when funds hit your bank account, yeah, you feel on the top of the world, that's for sure.
Yeah, this is like it seems counterintuitive, but this is one of the most common feedback that I usually get. That that kind of feeling, that kind of excitement when you sign the paper, when money lands on your bank account, that lasts very, very few moments of time. Like it's a very, very short moment, and then you get back, start thinking about, okay, what I do next, what's need to be done, what's need to be built, because once you feel that kind of experience, it's like an addiction. You need to do it. You have that kind of energy and you need to use it in some way. So it's very, very common for founders to experience that. So you're not alone under that point of view. And it's very common. Maybe last question from my side. This is something that I usually ask to people like you that were actually very successful in building something or raising rounds. What would be an advice that you would give to people out there that are, maybe starting their company for the first time, or maybe struggling with fundraising, or maybe trying to validate their product for the first time? So what's the advice that you would give to newborn founders out there?
Yeah, well, probably I will say it this way. Well, it's tough. It will be tough,
Mm,
and this is meant to be tough. There is
mm,
no other way. I mean, what founders are trying to do. We want to be one out of a million, right? So there are billions of people out there in the world who don't build anything, right? They just live their
yeah.
lives. go to work from 9 to 6, and we just do this for the sake of doing, and with no desire, no passion, nothing at all, right? And
Mhm.
founders are the people who are completely opposite, right? They always want to build, to create, to innovate, but that process is tough, right? It's and it
Mhm.
cannot be easy, and there will be failures, there will be mistakes, and it might take years until you become successful. Some people
Mhm.
never do, right? So, and well, but that's exactly how it should be, right? So Rome was not built in a day, and same with your
Yeah.
startup. Before Paysolut and exit to SumUp, I had 20 years of a roller coaster, ups and downs, and very complex moments, and closing the previous businesses. And mentally, that's extremely tough to
That's tough.
close your
Yeah.
business, right? You have just invested a year, 2 years, 3 years, maybe more, maybe less, and you're closing down your business. It's very tough, but then close it, have some rest, start something again. Yeah, that's where you build this, mental resilience and toughness, and that's the way to success. Yeah, probably cannot really say that the road is going to be rosy. It will not, and it does not have to be.
No, I totally agree with that. I think that big things are never easy, and this is not for everyone, definitely, and as it should be. It's not an easy life. But yeah, Aurimas, thank you very much for this time together. It was a very, very interesting conversation, and
Thank you.
congrats again for everything that you're doing with Copla.
Thank you. Thank you. And speak to you soon.
Thank you. Have a good one. Bye bye.
Cheers. Bye.